All right, so today let's take a deep dive into NIO. They're a major player in the Chinese EV market, but their stock is trading below its IPO price. Kind of a head scratcher, right?
Yeah, it's a curious situation for sure. I mean, NIO's a leading EV maker in China. They've got this innovative battery swapping technology,
Hmm.
and they're operating in a market that's absolutely exploding.
So to try and figure this out, we're going to take a look at a recent analysis from the Motley Fool. They break down NIO's recent performance, their potential for growth, and that all-important question, can they turn a profit?
Yeah, the Motley Fool points out something really interesting in NIO's Q3 2024 earnings report. They missed analysts' expectations, revenue dipped, and their net loss actually widened. You'd think that would send investors running for the hills.
Yeah, you'd think so, but their stock barely reacted. It's already down about 50% this year, so maybe it's already priced in.
That's a possibility. But here's the thing, even with that setback, their deliveries are actually increasing, more ET series sedans,
Yeah.
Envo smart vehicles in China, and they're expanding into Europe.
Wow, so it sounds like they're quietly ramping up production. Their deliveries were already up 35% year over year by the end of October, a total of 170,257 vehicles.
It's like nobody's paying attention to the actual direction they're heading in.
Huh.
Which brings us to their future. What does their growth potential look like?
Well, they're projecting deliveries between 72,000 and 75,000 vehicles just in Q4 of 2024. That means their total deliveries for the year could jump by 51% to 53% compared to last year.
And analysts seem to be on board with that. They're predicting a 25% revenue growth for this year and a massive 42% increase in 2024.
So those are huge numbers, especially when you compare them to someone like Tesla. NIO's price-to-sales ratio is under 1, while Tesla's is 9 times next year's sales. Does that suggest NIO is undervalued, or is there something else going on?
That's a million-dollar question. It all comes down to profitability. Growth is great, but investors ultimately want to see a return.
Right. They want to know if NIO can actually make money. So tell me more about their path to profitability.
Well, it's been a bit of a roller coaster. Their vehicle margin peaked at a healthy 20.2% in 2021. But then
The price war in the Chinese EV market happened. Their vehicle margin dropped to 9.5% in 2023 because of all the pressure to lower prices.
That's right. But it's not all doom and gloom. Their vehicle margin has been climbing back up and reached 13.1% in Q3 of this year.
So some positive signs there. What's their strategy to get back to profitability?
Their CFO, Stanley Kwai, has set a target of 15% vehicle margin for Q4 of 2024. And he sees that as the baseline for 2025, especially as they plan to sell more premium vehicles, which should carry higher margins.
Focusing on higher-end models makes sense, but what about their long-term goals?
Their long-term goal is to increase their overall gross margin to 20%. They're aiming to optimize their marketing and supply chain strategies.
So it sounds promising, but are there any potential risks we need to be aware of?
Well, one that stands out is rising tariffs on Chinese EVs in Europe and other overseas markets. These tariffs could offset some of the gains they're making.
So strong growth, a move towards profitability, but also some external factors they can't control. It's definitely a balancing act.
And this is where the tension between growth and profitability becomes really clear. They're expanding aggressively, but they're also investing heavily in those battery swapping stations.
Which right now are operating at a loss.
Exactly. So analysts predict that NIO will narrow its net losses through 2026, but they don't expect them to break even anytime soon.
So the big question for investors is NIO's long-term growth potential worth the wait for profitability?
It's a tough question. To really understand the answer, we need to dig a little deeper, not just into the numbers, but into NIO's strategy, the risks involved, and ultimately, their vision for the future.
I'm ready to dive deeper. Let's see what we find.
This EV market, especially in China, it's incredibly dynamic. It's like a Formula E race with everyone fighting for the lead.
And it's not just other Chinese EV startups they're up against. They're competing with giants like Tesla, who already have a strong presence in China.
Right, and we can't forget about the traditional automakers. They're quickly electrifying their fleets. Everyone wants a piece of the EV pie.
So what makes NIO stand out in this crowded market?
Well, remember their unique battery swapping technology. That's one of their key differentiators.
Right. Remind me how that works again.
So imagine pulling into a station, not to plug in and wait, but to swap out your depleted battery for a fully charged one. It only takes a few minutes.
So it's like a pit stop. But for your car's battery, what are the advantages besides speed?
Well, speed is a big one, of course. No more hanging around waiting for your car to charge. Plus, it eliminates the need for a home charger. which can be a big problem for people living in apartments.
Yeah, I can see how that would be appealing, especially for people who can't easily charge at home.
Exactly. And from an investor's standpoint, this battery swapping technology could give NIO a real competitive edge, especially as they expand into new markets like Europe, where charging infrastructure isn't as developed.
So they're ahead of the curve in that sense. But it's a big investment, isn't it? Building out that network of swapping stations.
It's a bold move for sure, and it requires a lot of upfront investment.
Yeah.
But they're playing the long game. If they can scale this effectively, the payoff could be huge.
Okay, so battery swapping is one way they're differentiating themselves. What else are they doing to stay ahead in this market?
They're also focusing heavily on software and autonomous driving.
So they're not just building electric cars, they're building smart electric cars.
Exactly. You could say that if Tesla is like the Apple of EVs, NIO is aiming to be more like Google.
So they're anticipating a future where it's not just about range, but about how seamlessly your car integrates with your digital life.
Precisely. Their NIO pilot system is a good example. It's their advanced driver assistance system, with features like lane keeping, adaptive cruise control, and even self-parking.
So they're packing their cars with tech to appeal to tech-savvy buyers. But can they maintain this premium approach with all the price competition in the Chinese EV market?
That's a valid concern. They've already felt the pressure. But they're betting that their unique features and brand positioning will allow them to justify a premium price.
It's a delicate balancing act, for sure.
And that's where their expansion strategy comes into play. They're not content with just the Chinese market. They're also targeting Europe.
Europe is a whole other ballgame, though. New markets, new regulations, new consumer preferences.
Absolutely. But they seem to be adapting their approach. They've launched cars in several European countries, and they're building their battery swapping network there too.
That's a big investment, especially considering they're not profitable yet.
It is, but expanding into Europe could give them access to a much larger market and help diversify their revenue streams.
It could also protect them from some of the volatility in the Chinese market.
True, but international expansion always comes with its own set of challenges.
And then there's the political landscape. We've seen how trade tensions can really impact global companies.
You're hitting on a crucial point: the global political climate, particularly when it comes to China, could have a major impact on NIO's success in Europe and beyond.
So even with their strong growth and bold moves, there are external factors that could really make or break them.
Which is why it's so important to look beyond the hype and really dig into the specifics of their business and the market forces at play.
Which brings us back to those key questions from the Motley Fool analysis. They can help us cut through the noise.
Exactly. Those questions are designed to help us figure out if NIO's strengths outweigh the risks.
So let's start with their valuation. The Motley Fool points out that their price-to-sales ratio is incredibly low compared to Tesla. But does that automatically mean they're a bargain?
Not necessarily. A low price-to-sales ratio could also mean that the market has doubts about their future prospects.
So we need to understand why their valuation's so low. Are investors worried about profitability? Are they concerned about the competition? Or are they just not convinced about their growth potential?
Those are all good questions. By exploring those questions, we can get a better understanding of NIO's true value.
So let's move on to the second question. Can NIO's technology give them a lasting advantage? They're betting big on battery swapping and autonomous driving, but will those bets pay off?
We need to think about the adoption rate of those technologies and how they fit into the larger EV ecosystem.
Right. It needs to be practical and scalable.
Exactly. Battery swapping needs a massive network of stations, which takes time and money to build. And then there's the question of standardization.
And what about autonomous driving? Are there similar challenges there?
Absolutely. The technology is advancing rapidly, but it still faces regulatory hurdles and public perception issues, not to mention the ethical considerations.
So there are a lot of unknowns. But what about their ability to actually execute on their plans and become profitable? That seems like the most important question.
It is. We can analyze their financials and technology, but ultimately it comes down to execution.
Right. They need to be able to manage their operations and control costs.
Exactly. And we need to consider their management team and their track record.
And we can't forget about those external pressures, like competition, the political climate, and any potential economic headwinds.
It's a complex equation with a lot of moving parts.
And that's why we always encourage our listeners to do their own research. Investing isn't about blind faith. It's about making informed decisions.
Absolutely.
So we hope this discussion has given you the tools to do just that.
But before we move on, we want to leave you with one final thought-provoking question.
Something to think about as you evaluate NEO.
So here's the question. Given NEO's ambitious plans and how quickly the EV market is changing, what external factors could really impact their success in the future?
What could accelerate their growth or throw them completely off course?
Think about it. Do your own research and let us know what you think.
Because continuous learning and critical thinking are key in the world of investing.
And with that, we'll wrap up this part of our deep dive into NEO.
We hope you're finding it helpful, but there's one more piece of the puzzle we need to explore. Okay, so we've talked a lot about NEO, their performance, their growth potential, their path to profitability, and how they're trying to stand out in this EV market. We even dug into those key questions from the Motley Fool analysis.
Yeah, we've covered a lot of ground. But before we wrap things up, I think it's important to take a step back and look at the bigger picture here.
Right, because the EV market is just one part of a much larger story, the global shift towards a more sustainable future.
Exactly. It's a massive transformation in how we produce and use energy. And these changes will impact pretty much everything. Industries, economies, our everyday lives.
So as investors, it's crucial to understand these larger trends and how they might impact companies like NEO.
Right, because investing in NEO isn't just about their cars. It's about the future of transportation and the role EVs will play in that future.
And that future is shaped by so many things.
Yeah, absolutely. Things like government policies, tech advancements, consumer behavior, even geopolitics.
So let's unpack some of those external forces. What are the big things that could impact NEO's success in the years to come?
One of the most important factors is government support for EVs. We're seeing countries around the world putting policies in place to encourage people to buy EVs. Tax breaks, subsidies, investments in charging infrastructure.
And those incentives can really drive demand and give companies like NEO a boost.
But those policies can change. If subsidies are reduced or regulations become stricter, it could create some real challenges for EV makers.
So investors need to pay close attention to the regulatory landscape.
Absolutely. And then there's the pace of technological development. The EV industry is moving so fast. New battery technologies, charging solutions, self-driving features.
It's exciting, but also makes it hard to predict the future.
Right. If NEO can keep up and adapt, it'll strengthen their position as a leader.
But if they fall behind, they could struggle to compete.
And then you have the geopolitical factors. Things like trade tensions, supply chain disruptions, political instability. These can all impact NEO's ability to operate globally.
So those are pretty big risks.
They are. And they're amplified for a company like NEO, operating in a global market that's so interconnected and politically charged.
So it's a lot to think about. Investors need to consider the company, but also the world around it.
Exactly. It's about approaching investing with a holistic mindset.
The best investors are the ones who can see the bigger picture.
They can connect the dots, anticipate trends, and understand how those larger forces shape companies.
Well said.
And on that note, I think we've reached the end of our deep dive into NEO.
Yeah, I think we've covered it all. We hope you found it informative and helpful. Remember, investing is a journey, so keep learning, keep exploring, and keep asking those tough questions.
And until next time, happy investing.